Hello, 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 hello. Saturday, December 7th, 6:30 p.m. Saturday night. I know, and you're stuck with me. December 7th, 6:30 p.m. It's a family. It's all good. How is everybody? Everybody good? Let's get the little notification out there so people don't get lost. No, it's very easy to do. All right. Relatively uneventful day for Bitcoin. That's okay. That's okay. We had some movement, some other coins, so that's good. A little alt playground going on. FET and Seller and some of those Binance IEOs cruising. Good stuff, good stuff. As far as Bitcoin's concerned, it's Saturday. Books are thin. Traders are quiet. So not a lot at the end of the day. We could look from open to close. But one really cool thing is the little retest here on the 20. Right? So that's your 20 daily moving average. Always nice to have that back in the picture. If you're looking for longs. If you're not looking for longs, then that's probably not what you wanted to see. But as it stands right now, even with the candle that we're looking at, is very similar to a shooting star. Has too much of a lower wick at the moment, so it wouldn't really qualify as it. But if we do close around 74.86 or in that ballpark, then we could look at potential shooting star scenarios. On top of that, did not get any test of the 9. We did not get a test so far of the horizontal at 74.32. It's really 74.32 to 74.11. The 74.11 zone is all the way back here, back from the 2018 move. It's the last high before the range and drop, right? This very last high right here. On the other chart we marked it. I left it alone on this one. That's should be like 74.11, I believe it was. I don't know. Let's find out. Let's see. 74.11, yeah. So I'll take that off in a second because we got we're covered with 32. And that sort of covers like that area. But you see how perfectly 74.11 was here for the wick and how perfectly 74.32 was for the bodies. So, both of them are good, and that's why it's more or less a range than anything else. But, nonetheless, we'll just clean up the chart a little bit. We'll just leave one on there and boom, boom, just like that. Easy peasy. If we go to the hourly chart, you can see really, really how boring price action has been. Let's see. Oh, that's visible range. Let me put on the other one here. You can see the session. Session volume. So you'll be able to see like broken down into the day. It's just like it's just nothing happened. It was just a very, very, very quiet day. Now it's fine. We expect that, right? It's the weekend, so it's no big deal. Let's see here. We don't really have to change this right now, but do we want to change it? No, we'll just leave it alone. It's fine. We'll keep the point of control on. Let me bump this up. Value area 70. That's good. Rose, good. I don't know if 60 is going to cut it. Let's get something a little bit more dramatic in here. Oh, that's nope. Too much. Wrong way. There we go. Let's go back to 60. Okay. Very good. All right, good enough. Anyway, so if you look at just the last 24 hours, right? That's the range, session range, daily. Just nothing. Not much. You got a high side push, 76 and change. You got a low side push, 74.87. Point of control, it's right in the middle. Just sitting right here at, what do we got? 75.45. So really just not much. Now, if we follow the hourly, right, you can see right here, you lost to 20. You came down to test it. You had it. You kept it. You lost it. And then even further down here now, it's resistance. You flipped it over, right? Resistance, resistance, resistance. Kind of a break and close, but didn't do anything. Next candle came in, ripped it back down. Right, you held the 9 right here, which is the first time in a little while. So as far as like the hourly is concerned, even though there's not a whole lot going on, you can see where all the concentrated effort is, right? Everything's right here. Everything's happening right here. All right. Now, if you span that back like a few days, look at the range, right? On days like this, days like this, days like this. This is so small. It's just so small. You know, there's just nothing happening here. And that's fine. Same thing here. Not much. All right, so this is Saturday, Friday, Thursday, Wednesday, Tuesday, Monday, Sunday, Saturday. So this is last Saturday. And last Saturday was a dump day, really. Last Saturday came in hot and just dumped almost all day. And then Sunday just picked up sort of where it left off, made a big, massive low, but then had a good rally back up. Got itself back to, you know, about 3/4 of that candle. But this is it. That's it. You know, you're going to get that on the weekends. So what we talk about thin books is easy to move it. But if no one's going to take advantage of it, then it doesn't even matter. You know what I mean? If people are going to take advantage of it, that's one thing, because they could push it around a little bit. 4-hour chart's pretty interesting, though. Look at where we got the crossover, the 920 cross. And we held it ever since. Now, this is not uncommon. You see this sideways action here to catch back up with the 9. So you can see, let's see if we see that anywhere else. Of course, we need an uptrend, which is damn near impossible with Bitcoin these days. But let's see. Nah, not well, a little bit here, but not really. Not really. So something like this. You got a very small uptrend here, but this is a good thing to study how it reacts, right? So you got the 920 crossover. The 9 holds it. It gets away from it for a few days, right? Or this is 4 hours, so for a few periods. And then it goes sideways. And the sideways is to catch back up to the 9. Then the 9 will prop it back up again. You get one more move. You'll step away from it for a little bit. And then you kind of go sideways or down to get back to it. When the 9 gives out, your 20 is essentially your backup. So, like if you were going to ride this whole trend, right, then you could either do like a percentage stop loss under the 9, or you want to play it super safe, you put a stop under the 20, and you allow that 20 touch. Now you see the violation here, though. Likely that would have stopped you out. In hindsight, that's probably really good because it was the end of the trend. But also, right, you've just lost the 9. That would have been your indication to get out anyway on the confirmation candle, which would have been this candle here, right? So you would have allowed the confirmation candle to hit. You still got the 20. You push up, and if you wanted to play it safe, you get out of this trade right here because you still closed under the 9, right? Most traders will ride the 20 because although it didn't happen in this situation, you tap the 20 once, and then you basically go back in trend back to the 9, right? You tap the 20 again, and now, you know, you're asking for a lot. You know what I'm saying? 20 is good, you know, really depending on the asset, but 20 could be good for like 4 or 5 touches. Certainly no guarantee, but see, like this is sideways range right here. I don't even know why we're talking about this, but this is definitely Joe's fault. So this is like sideways range, right? And that's kind of how we would like box it out. We're like, all right, when we get a breakout of this chop, right, then we'll consider it a trend. We'll buy the retest, which is what happened, right? You got the breakout, you got the pullback, you buy the retest, Price comes up. Okay, you're good. You lost the 9, but you got the 20. All right, so you ride the 20. You're still in the trade. Everything's cool. Right? You get back to the 9. 9's great. 9's good. 9's good. You're about to lose it, but you don't. Right? You come back up again, and then bang, you hit the 9. Now, this is where things get really severe, right? And just from the dramaticness of these candles, you might want to think about getting the hell out. All right, but let's say you had one more touch on here. It would continue this. It would ride the 9 again until it lost it and went back to the 20. That's one strategy or one way you could do continuation trades using moving averages in your favor, right? And, obviously you wouldn't want to use them not in your favor. That would not make any sense, right? So what can we see on the 4-hour that we don't really see on the daily? Well, you get a little bit more detail as far as the price action is concerned. Is this as choppy as it really is? Yeah, it really is. A lot of these wicks down here are just designed to rip away some liquidation. You get this big move here, looks pretty good. A lot of people go bearish, like right here, right? Because they're expecting some sort of double top, some sort of resistance. They end up not getting it. It rips through, pulls back. So now you have your horizontal support resistance. That held really well right here. You can see that on the 4, and then a nice push up. She got resistance on trend, right? Brought it all back down. You ended up losing your 920 real quick, right? And then it's all bearish. All bearish, but it's sideways, right? So what's annoying about this is like you go bearish, you get this level down here at 71, and then you don't touch it again for like another 2 days. Like, all right, well, if it was that important, wouldn't we be like right back at it? Well, you would think. Not really. Price comes back down, rips it, drops it, basically a huge false break, and then price comes back up and starts doing this little dance here. So, what I want to point out is the early traders. Now, this is one step above intraday, kind of like short-term swing traders. You'd look for cues like this, 920 cross. Now, again, you took the 920 cross here, right? And you're probably a little late, got in a little late, and then you got destroyed. You take the 920 cross and you allow it to do its thing, give you a few candles. And at the end of the day, where you could have got in right at the beginning, you had another chance to get in right here. You had an even better entry down here, but this would have scared a lot of people off of even trading that trend. All right, but when you know, or at least when you have the idea of how this works, like this looks really sideways. So most traders be looking at this and be like, wow, this looks super bearish. You know what I mean? It's like if you were going to go up in an uptrend, like why the hell would you have all this trouble going through this? Well, the thing is you stepped away from the 9. So chances are you just want to meet back up, grab a little support, and push. All right? So you can see that on the 4. You don't necessarily see that on the daily. The daily operates a little bit differently when it comes to the 9. It could step away for, quite a while. It doesn't always hug price. It does lend its hand for sure, but this is the same deal, but this is a pullback. You didn't really go like sideways to meet up to it. You had a pretty dramatic pullback. And then you rode it for a little bit, but then you lost it. And then you got your cross under, and we dumped. Right? And I think judging by the slope, I think we'll get that crossover when we close this candle. I think we'll have a cross. And that'll put the 20, I believe, don't rewind the tape if I'm wrong, but I'd like to see these swap positions. I'd like to see the 20 on the horizontal. And I'd like to see the 9 up in like the 75 zone. I don't know if it's going to go all the way up to 75, but split the difference, call it like 74.60. Right? That gives a little bit of separation between the 9 and the 20. It gives the crossover, and then it's Sunday trading, so a lot of traders will probably just wait for Monday anyway. But, you look for the confirmation on the next day. Okay, we got the crossover. Are we good? Can we go long? Now, again, we say it a million times, right? Don't long resistance. We don't like longing resistance. And you have plenty of it. So if your thesis or your setup allows for local resistance, as in this is so strong that it'll pop through and just simply ignore it and come back and retest it, then that's fine. Otherwise, it'll be a little while before you could take a long trade, because you wouldn't be longing the swing fail and you wouldn't be longing the longer trend. So instead, even if you broke through this, are you really going to long for what, like, $100 just to find more resistance, sell it again, come back? Now you're scalping, you know what I mean? Or you're intraday trading. All right, so the longer term traders, they'll probably wait. And if we get up above, like tomorrow, the longer trend, the overall trend is at 78.42. That gets the psychological 7,800 structure, as well as just structure. It's not just psychological. But that'll get 7,800 taken care of, at which case you'd be looking for some type of push into the 8K zone, pullback on, Monday or Tuesday, depending on if this thing does go bullish, right? Look for that pullback and then buy the retest. That's one way that you could kind of ride this move here. And there's always the opportunity that it bails, right? There's always the chance that this trend does not hold. And if that is the case, then, you don't want to get burned in a long, but you do want to keep your stops in something that makes sense, right? If you pull all the way down, I still expect support at the 350. This 350, it's sloppy. It's sloppy, but it's support, And, that being said, I'm still, I'm okay with looking for this. Where is it? Why do I not have a 2-3 or a 3? I'm still totally cool with this move right here. Why is this totally wrong? What is going on here? 2-3-3-8. What happened? What happened? Hold on, bear with me. My brain is broken at the moment. 2-3-3-8 79. Oh, that's all wrong. Oh yeah, duh. We got more action over here, guys. Why didn't someone tell me? There we go. Yeah, the whole move. There, that makes a lot more sense. 2-3-3-8. Now 2-3 sitting 82.50. It's a pretty good zone, if I don't say so myself. Not to mention the 3-8 sitting at 93.28, which is awfully close to the overall goal at the 200. Right, so, as dramatic as it sounded a few weeks ago, it looks more and more promising as the days go by. You'd hate to make that call and be wrong, but trading is about, taking risks. So it really wouldn't be as dramatic as it seemed at the time. But, when you got a nice drop, you got a pretty good pull, you're forming a little W here, and then you rip up, right? That's just straight up price action. And then you come down to like a 127. Probably come back, find more resistance on this level again, and then you'd be looking somewhere down here. So, it's certainly a possibility that I don't think a whole lot of people are looking at. And if it does happen, great. Put the longs in and rock and roll. But that also means you don't have to like put the longs in today. If that's the overall, you could put longs in like back here on a retest and try to pull in 15 to 19%, something like that on Bitcoin. That's great. It's great. All right, let's see. Nasser, good evening, everyone. Miles Manter, happy Saturday, fellas. Michael Aranya, hopefully I got that right. I usually just call you Michael. Hi, guys. Roca, good evening. Mr. Puerto Rico. What's up, Chinkas and SP crew? Hello, hello, hello. Muhammad Waris, hi. Is there bearish divergence on the RSI on 4-hour and 12-hour? Well, let's find out. That's for Bitcoin, I would assume. Let's see. Bitcoin. All right, let's see. 4-hour. Four-hour divergence, bearish. Let's see. Do we have higher highs? We do. Guess I got to turn the drawing back on here. So let's see. Higher high. Yeah, I guess that's technically our high. Let's see. High and high. No, that's confluence. Because you got a higher high, and then you got a higher high. So they agree with each other. So we're good on that. And what'd you say, 12-hour? Let's take a look. I don't like this. I like this chart. I thought I had another one I could have used. I can just throw RSI on here. Ain't no big deal. Let's just add it on. RSI. I don't know if I got another RSI. I know I do. One that I kind of liked. Where is it here? I do not see it. That makes me... Oh, those are... No, I want favorites. That's why. Okay. Let's see. I know there's this dude that makes a really good RSI. I'm trying to find him, but one of my buddies, this dude, he made an RSI for me. And it's exactly what I wanted. We went back and forth a little bit, but he was super nice to make it. So I like using a double RSI. I'm one of those oddballs. Of course, it's not meant for white backgrounds. So we'll have to make some changes here. All right. Let's see. First off, let's see. Well, we'll do... let's do fast blue. I'll turn the fast off, actually, so we don't have to confuse anybody. All right, so we'll just put the normal one on. Let's see, what is RSI 3? We take that off for now. We don't need pivots. Okay, keep the center line. So center line is something I like on RSIs. A lot of people don't use them. I'm a big fan. So we turn the aggressive off for now. Aggressive 85, aggressive 15. And we'll do, let's see, overbought. Just make that red. Oversold. Make that green. All right. We're getting somewhere, people. Don't worry. Center background. Yes, please. Do that. Kind of darken it up a little bit. That'd be nice. Overbought background. Yeah. I'll make that a little red-ish. Okay. And a little greenish. Come on. Yeah. Take a look at that puppy. All right, and then let's darken this up. Let's thicken it up because we want to be able to see it as best we can. Looks like that is not sitting on front of the background. That's kind of annoying. All right, no problem. There we go. We don't want it too dramatic. All right. This is just default 14, 70, 30, right? Nothing crazy. We should be on close. I guess it's just closed by default. Yeah, it doesn't look like we have the option. So the input's just going to be on close. All right. All right. Now we're back in action here. Let's see, what chart is this? Let's get rid of, yeah, it's fine. All right. Let's get rid of these guys. Okay. A little bit cleaner here. Very nice. Okay. So, and what'd you say? 12 hour? I know. It's Saturday. Bear with me. All right. Let's see. Bearish divergence. Okay. I mean, if we do the longer one here, you know, we could do this as a high. Right? But this is a lower high. So that's not going to work. That's okay, because I mean, this high, obviously you got nothing higher than that. So you got, there's no bearish divergence there. Look for some bullish, but no, these are in sequence as well. So all is good there. Let's see, we could go like a little further back, but you know, they become less and less reliable. But you do look for, like, this is one huge low and one huge low. So, you know, we look at that low and we say, okay, well, that low is here, this low is here. Those are in confluence. So then we look for like the highs. So if you do this guy and this guy, even though there's agreement, right? So this is not divergence, but you're missing out on all of this, right? So if you were going to play this, if it was actually there, you'd be playing this run right here. You know what I'm saying? Because, like, you got a peak, right? And then you got a peak, and then you got a valley, right? Or a trough, some people call it. Now, this right here, now, again, like, so this is the high, right? That's high, and that's a lower high, and that's a lower high. So it's just agreement. Sorry, man. There is no bearish divergence. But, you know, look nonetheless, right? You never know when that sneaky little stuff is going to show up, rear its ugly head, so to speak. All right, let's see. Do you think that taking the wicks out of your chart would make a better, cleaner, or easier to understand chart? For example, I tried to take the wicks out. Many trend lines, support, resistance were matching better. I wholeheartly disagree. Sorry. Maybe that's just me. So a wickless chart just doesn't show price action. You know, it just doesn't. You're missing way too much information. There's something to be said about the high, and there's something to be said about the low. Those are tester levels. Those are areas of, you know, like, so if you got a tester candle that's going to push one way or the other, up or down, and then price reverts back, right? That's your indication that you're going to go back there, right? That's your sort of like, may take a day, it may take 10, but I mean, that's kind of like one indication. When you get specific level retest, Fibonacci level retest, support resistance level retest, those should, and what you want to see is a wick, because the wick demonstrates that there was either a lot of buying or a lot of selling. You're just not going to see that on the body itself. It could happen right here, and you never know, because all you guys is tiny little body, right? And the body itself only moved 0.95% or $89, but your high was at 9,700 while your low was at 9,350. So think about that, right? That's a $350 span, but all you're showing is a 0.95 $89 push. Vastly different. Vastly different. And I myself prefer to have all the information, the right information. Look at that candle. Look at that candle. Bang. Right? But now the candle gives you a pattern. Now the candle, you can look at it and say, all right, well, as a candlestick, I could see indecision. Prior to that, I have this like lopsided lollipop over here. It's not really any candle at all, except a strong bearish with a long wick, right? So not much going on here. But over here, then I can see, okay, well, now I'm starting to get a low, a higher low, and a higher low, even though we got another candle of indecision. Then I got a bullish engulfing, and I say, okay, well, now we're straight. These three candles are now three methods. Three methods then push past the low from prior. These three take it over. It's ready to rock and roll. It's go time. All right. But again, that's, I'm one analyst. There's a million out there, and half of them will probably say no wicks. I couldn't disagree more, but that is just me. That is just me. Just curious to know what your opinion about this trading with no wicks thing. Well, yeah, you just heard it. I don't like it. I'm not a fan. But I'm also a fan of candlestick patterns. And you can't have candlestick patterns without wicks. So not every candle is going to be a Marabuzzo. And if you don't have wicks, then every candle is a Marabuzzo. So it's a monster no from me. It's not just like a partially I don't like it. It is just a vast no. There's nothing about it that I agree with. But, to each his own. Today, we got rejected by the 21 DMA. Yeah, we did. So the daily 21 DMA pushed you like right at the top. And I was going to add that in. I was like, the more I add these levels, I think people were starting to get confused. So I was like, I just. But that happened while I was writing the morning update. That was super early. But look at that, though. Right? It's like perfect. It's totally perfect. Which is great. Which is super great. But we'll pull that off for now. All right. So, saddens my heart. We did not. Look at that. We did not get the crossover. Yep. I was looking for it. We didn't get it. So it is what it is, right? You keep trading on. You can't just pretend like it happened. It didn't happen. So, we look at the 20 for support. Now the 9, it's only 9 days of history. So if you do get a big move up, you'll end up dragging it through and creating the cross. But then it doesn't count until the next day, because you're currently painting it. So the paint would be wet, so no good. You'd have to wait for Monday. So you wait for Sunday's candle to close, and then Monday you could say, okay, well, now we got to cross, or we don't. If price pushes way down, then they'll repel each other like the positive sides of magnets, right? It'll just like push itself away. So nothing to see here just yet. All right, not on the daily. Not for that. Low side remains the same. 74.52, 74.11. In that ballpark, still looking for a support test. We are still, well above the 350, which is here. We have not retested overall trend, which, let's see, for Sunday, daily is going to be sitting somewhere around, call it like 73.20. All right. High side swing fail test, 76.77. So above yesterday's high. Yesterday's candle opened at 75.35, hit a high of 76.38, a low down to 74.86, closed it out at 75.02. for a loss of $39 at 0.52%. So again, super tight range, nothing really shaking in this candle. Not a whole lot to look at as far as the candle is concerned. This is suspect shooting star. Suspect. Now, I know we haven't talked about shooting stars yet, but we will soon. But if you can identify what an inverted hammer looks like, since we've already discussed those, then you just place it, instead of at the bottom of a downtrend, you place it at the top of an uptrend. That being said, it should have little to no lower wick. And this is kind of right on the edge. You know, it's a super small wick. It's a wick nonetheless. The size of the wick is probably half the body, which is a lot, right? I mean, that's a lot. At the end of the day, that's a large wick for something that should have no wick. All right, so if you wanted to play it as a shooting star, then this is your confirmation candle. Then you wait another 23 hours, 52 minutes, and 48 seconds. Whew. And if you get confirmation that to go short, then that would be your indication to go short. If you have, other things to look at here in the 21, DEMA would probably be one of those things you would look at in order to get an idea of whether you want to go long or short. A pullback here, not a major pullback, but just a retest pullback would be super normal. But again, like the figure 8 over here, so you got you got the full push. You got the 1, the 2, and then you're looking for the 3, right? I used to draw those out, but they for you, I will. So in other words, it'll look like this. You could do all 3 of them if you want. So it'll look like, basically you got this, all right, and then you got this, and then you got this, and then you're looking for this. Well, let's keep it real, right? What do we got? What is 1, 2, 3, 4, and then the break. We got 1, 2, 3, 4, 5. So we'll just do 4. So we'll do 1, 2, 3, 4. Oh, whatever, 5. Like that. Right? So, as wonky as it looks, this is really what we're looking for. Right? I mean, you just want to see a retest, and then you want to be done with it. You just want to put this thing in the bag. And from here, you'd be looking for longs. Of course, you got a ton of resistance in your way, but, you'd still be looking for longs. Okay? Anyway, I think we got a little off track there. Let's see. Daniel, hello. Miles, Manthur, Chinggis, can you post your fib settings possibly? I have a lot of templates. These are all fib templates. So, what which one would you like? And we'll go through. Yeah. So let me read the rest of chat, and then you could tell me what you're looking for. Let's see, Nasser, dope scalp strategy. What's this? What? Wait, what? What? You saying for the 920? I use that. I do use it. When I first started trading, I didn't have any strategies, so I had to develop my own. And then when you think you're like a genius, you're like, oh, I got this strategy, it works. And then you do some research, and you're like, yeah, that's like everybody's first strategy. Whatever. It's good because it eliminates some of the noise, right? Again, like any one indicator, you would never want to use it as like your entry and exit. You like to couple that with something else, at least one other thing, just so you're not solely making decisions off one thing, right? But at the end of the day, if you're not if you're not like really, really, really trying to maximize, I bought the bottom and dude, I sold the top, and you're cool with like the middle ground, then something like that's very effective, to the tune of like, I'm just going to buy it in trend and then I'll just sell it, after the top's been found. So it's one of those situations where you can't always be looking at your account value because you won't be able to trade like that, because you'll always consider you had X amount until you sold for a loss. Even though you took like a 300% gain, it could have been 450. If that's your mentality, don't even bother. Right? It won't work for you. You'll you just won't be able to handle it. All right. Let's see. Miles, still waiting for you, buddy. Daniel, I am curious to know your opinion about Binance IEOs. Do you think Binance part of them? Do you think Binance part of them in a way, like money or investing? Oh, do I think that Binance is? Yeah. Yeah. I think very much so. Very much so. France, evening fellas, and Roca, daily candle shooting star plus tweet. No. Well, it's not a shooting star. We just talked about that. And tweezer? No. You're looking like a tweezer top? No. No, it's a higher high. It's a higher high. It's probably close, but like at what point do you allow the threshold, right? 0.26%, $20. Like if it was let's find an example. Like that's suspect, but we might let that ride. Okay, here. Now, this is certainly a higher low. Certainly a higher low, but let's measure that. 0.16. Right? It's basically half of what we just looked at. All right, so like technically it's got to be the same level. It depends how much you want to bend the rules. Visually, this doesn't look anything like a tweezer top, so I wouldn't entertain it at all. To me, it's not even close. Even though, threshold wise, like if you have a 0.5 threshold, then sure. But the problem is you're creating your own rules, and it does not mean that it's going to react the same. If you have a tweezer top, you expect a reaction most of the time. Tweezer top would give you bottom, reversal. If you consider, something within a 0.2, 0.3, 0.4, 0.5, a tweezer top, you would then have to go back and find all the times that happened and then record the responses to get an idea of what the probability of a 0.5 threshold tweezer top is compared to a tweezer top. You got to remember that a tweezer top is a candlestick pattern for a reason. And the reason why it's a tweezer top is because they stop or found resistance at, exactly the same level or extremely close, not $20, right? So, that psychology behind those two highs being so close is what drives the price down. And same thing with a tweezer bottom. But, that being said, you can allow for some sort of discrepancy when it's like very far away. I'm trying to find like an example, but like these are like dramatic wicks, right? If this came within like 10, 15 bucks. Probably call that a tweezer bottom, right? But it didn't. It's like super far off. Like this, by eye, looks like a tweezer top. And I would call that a tweezer top. This right here, for sure. Right? So, I mean, I can measure it now and just find out what it is. 0.07. It's a $4 difference on an asset that at the time was trading at $5,500. Yeah. But you can see that by eye. You know what I'm saying? Like if you're considering that a tweezer top, that's no way. They're not even close. They're not even close. And that may just take may take your eye a little while to adjust. I've been staring at charts for a very long time. So I could sort of I could see them quicker. That's no way. That's no way. That's no way. It's close, but no way. Right? It's just not a tweezer top. But it's close. It's close. 0.19. Right? So, it's another $20 difference. It's, again, depends on how crazy analytical you want to be. But some of these things have rules for a reason. And just completely disregarding them is not going to get you the kind of results you're looking for. And then you're going to be upset that, hey, the tweezer top didn't play out. Well, it wasn't a tweezer top. And that's why it didn't play out. Now, the shooting star is not a shooting star. Again, I mean, we just talked about that. But, yeah, the lower wick is it's just too long. It's similar. It's just too long. It's just not a shooting star. It's close. It just doesn't qualify. The rules don't qualify. All right, let's see. XBT USD is quite in the range. Just BitMEX. Stamp is different of XBT. Yeah. Well, XBT, the BitMEX chart, I wouldn't put a whole lot of weight in. Not when it comes to analysis of the overall market. It's nice to know, that type of volume, but, that volume is beyond suspect. It's not even close to being legitimate. And so, a lot of people do trade MEX, but not all traders trade MEX. Not all traders trade leverage. Leverage generally brings out the more riskier traders that are willing to take higher chances in order to receive faster gains, as opposed to a spot market, which is very different. Spot market is, I will buy it here and I will sell it here. And that's why we use this. Michael, what's the best way to set stops on lower market cap coins? I like trading them, but would like to reduce slippage when I'm getting stopped out. Should I use limit stops or just increase my stop loss percentage from entry and sell my bags at resistance? I would ladder out, to be honest with you. I would never market out of a position unless I had to. There's just way too much slippage. So, if you're the kind of trader who's building the book, if that's how big your orders are, then you got to think like a maker. And to think like a maker is you need to hide or stagger your orders so that they can get filled without scaring everybody else that'll end up front running you. So you got a super low sat coin. I'm sure we could find one. What's one these days? 74. Nah, there's way worse out there. What's Syndicator maybe? It's 76. Let's see. we got to have something, right? Can we get Nexo on Binance? Huobi. No, that's too big. Poe, okay. Thank you. Jeez. Poet. Very nice. Okay. Yeah, perfect. All right. In the 20s. Thank you. Thank you, Nasser. Okay, so look, here's the deal, right? First off, super low sat coins are hyper intense to trade for this reason alone. This 2 sat move here from 28 to 30 is 7%, right? Remember how dramatic a 1 sat move was like a few months ago? It was like ridiculous. It's like a 14% move. Anyway, so here's the deal. You're here and whatever. You look at the chart and you're like, yeah, this is great, blah, blah, blah. I bought down here. I want to sell. Okay. So if you're putting sell orders in and your sell orders are creating a block, you're like, I want to sell here. All right. And that's my big sell. Bang, bang, boom, boom. I want to get the hell out and enjoy my profits. Okay? That's great. So you took the 30 block, basically. 30 sats you literally own. So anybody that wants to buy has to buy into your 30. Right? And then you will have a portion sold and they will have a portion owned at 30, right? That's trading. Now you have all these other guys. Where's our favorite little thing here? Oh, yeah, that dude. This guy's, he's a little bit bigger, right? And then you got, a couple more dudes. They're like flanking that guy, right? And these dudes are like, well, I want to get out too. And this freaking guy over here, this guy, Michael, decided to just steal all of the orders at 30 sats. So now if this guy wants to get out, what's he got to do? He's got to front run you and sell it for 29. And then this guy's like, well, screw you, dude. I don't want to get stuck holding this bag. I'll take 28. And then this guy's like, freaking 28, screw both of you. I'm getting the hell out of here, 27. And then this guy, I hate my life. I'm just going to leave it up here and wait for that thing to go. 31. So what you've effectively done is you've created a reason for these guys to front run you in sells, which means you get stuck at 30. While the price drops in front of your eyes, right? Better example of this would have been like over here, and it just drove the price down and down and down and down and down until finally all of the orders were finished. Everybody stopped front running everybody and the buyers started to finally get interested and they were like, well, I want to buy. And then you got another wall here. It's called a sell wall. Now, right? If anybody wants to get in, now they got to front run this guy. Right? This guy's trying to buy the 27 level. So he puts, $2 million up at 27. What are you going to do? You going to wait until $1 million gets sold into 27? Or are you just going to buy 28 and just own the asset and be done with it? You're probably going to buy 28. The problem is, he could do this whenever he wants. Gone. Oh, it's back. Holy crap. And then it's gone. Right? Just like that. So the thing about order books and orders in general they can all be pulled at any time. So if you want to drive interest into a coin, or if you want to suppress the price in order to be able to accumulate more, those are things you could do when you have a large enough capital and you own enough of the asset. It's called manipulation, which is highly illegal, but it's not 100% illegal in crypto. if that makes any sense. But hey, we got the freedom to trade it, so one thing at a time, right? I mean, it is what it is. The idea would be to try to recognize that. So to answer your question, since Joe L has screwed up the answer, I would ladder out, and I would not sell it back to Bitcoin. That would be number one. All right. I would take the same asset. I don't know if Poe has a USDT pair. No. Well, let's say one, for example, right? So one BTC, right, it just creeped into, 100 sats? So sat to sat is still going to be, somewhat dramatic here. One sat down from 100 to 99 is a 1% move, right? If you want to sell, you get far more resolution using something else instead of a Satoshi. So now you want a 0.18 drop. How about a 0.32 drop, 0.23, 0.3? You don't have to settle for a 1% loss or a 1% difference. Now you can use resolution to say, all right, well, I want to get out at, what is this, 0074, 00741, 00742, and 00739. Split those up into 4 orders, drop them in the books, and you're done. Sound good? One looks fantastic, by the way. Look at this. Look at these levels. Just smashed it. All right, so this is what you want to see. This is like, oh, man, this is perfect. So you want to see like something like that, where you have a major level that's been resistance, tested, failed, higher low, push up, didn't even get there, push down, made a new lower low. That kind of screwed this whole thing up. Push back up again, resistance again, solid pullback, higher low, tester candle. Not going to see that without a wick. And then a push up break. Now, ideally, you would get a pullback right here. So that's what I'd be looking for. Right, and then you would buy the pullback. All right, so this, guess we'll have to use this super wonky wick down here. So you have this so far. Yeah, so the other thing to see here is just like just your normal structure. So you got your low now, your high, your higher low, your higher high. Look for, we should make this like a different color. Like that. So look for this structure level to get retested. And then if you do, it would be even, better. Whoops. If it's confluence with something else, which is just below the buy box, so you would slide your buy box down. And that becomes your buy box because this makes more sense, and that's your confluence, right? And then you could do one more thing. We don't know that this is the top yet, but let's just say it is, right? Then we would take our low of the move, our high. Oh, Miles, you never got back to me for these things. Fibs. Anyhow. So then you take a look at something like this, say, all right, well, what would that end up being? Oh, a 382 pullback. That's kind of shallow. But for like a new trend, you could have that. But then you say, all right, well, let me measure this pullback and see if like that would even make sense. Say, well, that pullback came to the 5. Yeah, I don't know. I'm not really buying it. So then I would have to look at like more action over here and say, all right, well, what was this pullback? Well, this pullback was a little bit more dramatic, but here's the low, here's the high, here's the pullback. That's like in between the 7.8 and the 8.86. If I take the whole thing, then we're just below the 7.0. We know that this is like an 8.86, if not 100. So not a lot of great pullback, data here. We could take this guy. It's at least in the same trend. So 7.0 again. So I would probably lean for, if this structure is going to get tested, it might be the low end of the structure, which means your low end is probably closer to here, which is under your 5, which also means this. There's a very good chance that this, right? This is like reverse engineering a high. Now, if we were to break to 951, a pullback down to structure would be near a 706. This is a sneaky way to try to find a high that doesn't exist yet. I don't recommend this to anybody unless you just like theories. All right? But that, it's a potential chance. It gives you like a potential target. But high side targets, you can find right here, right there. I mean, you're getting hammered right now on, right, structure. I mean, perfectly. Right here. Look at that structure level. It's exactly where we're trading. Perfect resistance. All right. You got another level up here. You got a level over here. Are any of these levels though? 951? Oh, it is a level. Oh my God. Oh, this would be amazing. Listen, don't trade this. Just just look at it for its potential theory. Don't do anything with it. All right. Anyway, yeah. So, who was that? Was that Michael? All right. So, Michael, did that answer your question? I hope so. And Miles, you still never got back to me. So now you're on the Joe L list, Miles. I'm sorry. You did it to yourself. It's cool. It's it's nothing. I can't help you now. All right. Ooh, look at this. We're getting a push to the downside. Very nice. Very nice. I might have to pull my eyes away for just a second over here. Don't mind me. All right. So looking for buying to happen. 74.34 zone. Okay, in that general area. 74.11 is still okay too. We'll kind of see where this thing sort of levels off at. We'll see how far it wants to go down. Now, if it goes to the 350, then that's like really asking a lot. But of course, levels are down there. A test to the 9 brings it down to 74.44. So you still have a little bit of room to go for that, but it's already starting to get bought up a little bit here. A little bit of buying going on. So we'll see if that's all the action we're going to get. For the moment, it's that might be all we see for the moment. It's trying to come back, a couple dollars at a time. Now it's just doing the little pulsating dance here. But that was a perfect little test of the 9, though. So we got the 9 and the 20. By the time this pulls up back to open, it'll rip the 9 up with it, which means that you'll have the test on the low side. See how the 9 just jumped up to 74.49. The low of this candle, 74.54. So it's a $6 difference. As this comes up, 9 will come up, which means it'll drag it down to the bottom of that wick. And then that would be that. A test of the 9. So with the 9 test on the daily, that's really good. It's what you want to see for continuation to the upside. Again, if this does push higher, then we'll end up crossing these by default. It just won't count because the paint's still going to be wet. So we got to wait for the Sunday candle to close in 23 and change. And then when it does, then we can look at that as a natural crossover. But not right now. We have to wait for that. All right, so Bitcoin did make a very small move. It may not be over yet. Bitcoin does like to kind of like push up, get a feel for what's shaking, and then, drop the hammer down a little bit further. So we'll see if that's the plan of attack at the moment. But that being said, this is like one of the bigger moves we've had in a while. Like, look at this 15-minute chart. Oh, man, it is so boring. The price action is so boring. Look at this. Look at these candles. It's just nothing. This is the biggest candle on screen. Well, there might be something a little bigger over here. And, of course, it's got another 6 minutes, so we could get a wick or something. So, yeah, there's a couple candles, but for the most part, it's one of the bigger for sure. Just not a lot happening. It's the weekend. It happens. All right. Think that'll probably wrap it up. Let's see. Look at the BTCs. Break it down. Are we going to take... Yeah, no, not today. Not today. Monday. We're going to do it Monday. Monday is the day. Yeah, we'll take a look at it. We're going to go over some things. I've already spent some time with it. So I just want to make sure that we're not going to be disturbed with some other things. So, yeah, Monday will be the day. We will take a look at it. Don't you worry. All right. But as for this day, this night, this Saturday night, that'll wrap it up. Yeah. So I hope everybody has a good rest of their Saturday or beginning of their Sunday, whatever time zone you're in. Yeah, we'll do it again tomorrow. Tomorrow will be the weekly close, so we got a couple other things to talk about. We got a jam-packed session there, so we'll try to cram in there gold and silver and SPY and things like that. We'll take a look at the more macro views, the weekly, the monthly. Maybe we'll throw up the quarterly or something like that. But, yeah, we'll take a look. All the weekly stuff coming up tomorrow. Yeah, that'll wrap it up. So I want to see you guys on the exchange. And until then... happy trading.